Raise your hand if the words self-employment tax make your palms sweat just a little. Yeah, I've been there. When I first started my photography business, I had no clue how self-employment taxes worked. I just knew that the IRS was going to want their cut. But here's the truth. Self-employment taxes don't have to be confusing or scary, and understanding them is one of the most powerful steps you can take to protect your income and grow your business. So let's break it down. I promise by the end of this video, you'll feel so much clearer and more confident about what you owe, when you owe it, and how to handle it without panic. This video is brought to you by my course, Make Taxes Suck Less, a beginner's guide to business taxes just for photographers. You can find a link to learn more about it in the description below. First, let's define what we're even talking about. Self-employment tax is how business owners like you and me pay Social Security and Medicare taxes. If you've ever had a regular 9-to-5 job, these were taken out of your paycheck automatically. But when you're self-employed, you're both the employer and the employee, so you're responsible for paying the full 15.3% yourself. 12.4% goes to Social Security and 2.9% goes to Medicare. Even if your photography business is just a side hustle, if you make $400 or more in net income, the IRS wants you to pay self-employment tax on that amount. So how do you know how much you owe? You're going to take your net income, which is your total business income minus your expenses, and that number is what self-employment tax is based on. So for example, let's say you made $25,000 in income and spent $5,000 on gear, software, and travel. Your net income would equal $20,000. That's what gets taxed at 15.3%. So you'd owe about $3,060 in self-employment tax. Now, here is the part a lot of people miss. If you expect to owe at least $1,000 in taxes, the IRS wants you to pay quarterly. Yep, not just once a year in April, 4 times throughout the year. April 15th, June 15th, September 15th, and January 15th of that following year. This helps you avoid underpayment penalties and a surprise tax bill come spring. Here's a pro tip. Set aside 25 to 30% of every payment you get and put it in a separate savings account just for taxes. Now, I know that was a lot of information, but here's what makes it manageable. Systems. Start by tracking your income and expenses monthly, whether that's through Google Sheets or software like QuickBooks or Wave. Even use a CRM like Honeybook or Dubsado to stay organized and make a habit of reviewing your numbers every month. And if you're feeling lost or overwhelmed, that's exactly why I created my course, Make Taxes Suck Less. It's your beginner-friendly guide to everything tax-related for photographers, from write-offs to self-employment tax and sales tax to what records to keep. Taxes don't have to be the part of your business you dread. With just a little understanding and a system in place, you can feel in control, confident, and actually keep more of what you earn. If this video helped, hit that like button, subscribe, and drop a comment below. What part of self-employment taxes confused you most? I'll be answering your questions in the comments. And don't forget to grab my Make Taxes Suck Less course in the description so you don't miss a thing. And I can't wait to see you guys in the next video. Bye.